I still have my legs out.
Oh, that's Denise shutting the door. Hey, I am Mike Young with Mike Young Real Estate. Oops, hold on a second. All right, this is a very serious video, but at the same time, I have to tell you, it's kind of, take it jokingly, because I need to give you a legal disclaimer here that this is for educational and informational purposes only, entertainment purposes, that's it. But I'm telling you right now, I am sounding the alarm. So let's get right into it, okay? I've been a licensed realtor since 2006. I've witnessed all the market cycles. I've been actually self-employed and in business myself. I bought and sold houses for others. I bought and sold my own rental properties. I've renovated my own rental properties. I've built houses. I bought most of my houses, I say near the market lows, but I have bought one that was near market high, and that really messed me up financially for a period of time. So that's why I want to make this video, because where are we now? Today is December 12th, which is the day before my 3rd anniversary. So happy anniversary, Denise. You get to watch this video.
Thanks.
And we're at a supercharger here. So I figured this is a great time to me to make this video, because I need to tell you right now that if you don't have to buy a house, if you don't have to move, generally, I would say don't right now, okay? Just don't, just wait. And I'm talking especially if you're in some overheated markets, because I'm licensed in North Carolina, in the Raleigh, North Carolina area, Raleigh, Durham, Chapel Hill, Wake Forest, Youngsville, you know, these types of areas, Cary, and these are very overheated markets. Now, how do I know this? How do I know what's going on? Well, I told you I've been licensed in 2006. And I remember back in 2005, 2006, if you guys can remember that long, if you've been around as an adult that long, or if not, it doesn't make any difference. But I'm just telling you from a historical perspective here that I could not stop people from buying houses. They were all scared that if they didn't buy right away, they would never be able to afford a house. And at that time, people weren't making offers well above asking price like it's happening now. And this is in certain markets, like I was saying, especially the hot markets like Raleigh, North Carolina is one. A couple of the affordable areas in California are actually hot markets too, in terms of real estate sales and rentals. And we'll get into that in a second, because people are moving from the overheated, super overpriced traditional areas to the less expensive areas or the value areas. And Raleigh used to be that way, but I don't think it is anymore, unfortunately. It's not an affordable area. Places in Arizona, places in Texas, places in Florida. These places and other places in the Carolinas, they're where everyone's moving. It's also a lot of Rust Belt to Sun Belt migration, so maybe it's a good time to buy up north. I don't know. Actually, I'd still wait because I think what's going to happen is there's going to be some massive corrections going on, okay? So basically, we're in the froth right now, in my opinion. And I'm talking both buying and renting. Rental prices in North Carolina, Raleigh have gone up about 40% in the last 12 months. I just heard that Collier County, Florida, down in Southwest Florida, has gone up 50% in the last 12 months. Other areas are similar, and in Florida, other areas in the Carolinas are similar, other areas in California, in Texas, in Austin, Texas, a lot of people are moving there too. Also, you know, Nevada, Arizona, these places where people are moving. Actually, a lot of them are fleeing California or fleeing the northern states. These places, they're super overheated. There's no way this can keep pace. Okay, think about it. If you got almost a 50% increase in your rent in 1 year, most people who are renting because most people, they're waiting to buy. They can't quite afford to buy. If you just heard that your rental payment's going up, and if you did, please let me know something in the comments there. You know you're hurting, okay? You're not gonna, how are you gonna make ends meet? You already can't buy the house. Now, if you own a house, you're like, oh, I'm sitting pretty, you know, I've got all this equity. But if you sell, where are you gonna go? Unless you're moving to a much less expensive area, it's not a good time to make any kind of transitions, because most of the time you can't even lock a price on a new build house. Sometimes you can, but a lot of times they have stuff in there where you have to pay the cost of increases of materials. And you know, my wife and I, Denise, who you heard coughing back there, she's got a little cold right now. We just got a quote on a house to build in Florida, and it was outrageous, absolutely outrageous. Okay, these are all signals that we are reaching the top of the market. You're seeing like an upward, like a straight up trajectory in pricing. We're seeing that in new construction. We're seeing that in rents. We're seeing that in resales. And it's not just housing. I want to extend this to other markets. The stock market in general, the S&P 500 has just gone on a ridiculous tear since the lows right after they announced all the restrictions because of COVID in 2020. And then also cars, especially used cars, but even new cars, but especially used cars. some people are trying to sell their used cars and get into a new car, but they keep either jacking the prices up, I know Tesla has, of new cars, or they're adding all this additional dealer markup. If you're with a traditional dealer, of course, Tesla has no dealers. That's a whole other story, and I got lots of videos on my adigitalnomad.net channel about that. But we've got all these issues all happening at once. Interest rates are at historic lows. So everyone's like, well, you know, prices aren't going to go anywhere. Payments are about the same, but interest rates they may not stay this low. And I think what's going to happen is people are going to get caught in the bind. Also, all the forbearances that happened during COVID, they're starting to move on foreclosures for them. So you've got all this stuff. It's like a perfect storm happening right now. This is just beginning with the forbearance foreclosures, because forbearance is ending. So they're starting to move on all this. There's going to be a big problem, okay? The problem is, I don't want people getting caught holding the bag. There are some people who, there are very few, but there are still some houses that have not yet reached the high peak price that they paid for in 2006 to 2008, all right? And some areas like Raleigh didn't really get hit hard till 2008. Raleigh is more resilient, I will say that. It's more of a value market, always has been. And they have more companies moving in. Everyone's like, well, companies keep moving in, it's not gonna do this, but you gotta remember, the value of rural real estate is also, far away real estate, also gonna be going up higher than ever because of working from home and Starlink internet, things like this, that are, in my opinion, I've done videos on this too, going to change the value, totally flip values, I think, in the most rural properties. So all this is happening all at once. And I think I'm seeing disaster, okay? I called this in 2005, 2006. Like I said, I could not stop people. I was trying to stop buyers from acquiring houses. I couldn't do it. Then the other call I made was 2011. That's when I started buying houses, okay? 2011 to about 2014. I bought quite a few at absolutely ridiculously low prices. And I made that call then. I said 2005, 2006, don't buy a house unless you absolutely have to. 2011, buy. You can't go wrong. Now I'm saying again, we're back to this market cycle again. Do not buy a house. And I'm a licensed real estate agent, okay? Unless you absolutely have to, or unless you're gonna stay put for, I'd say, at least 5 to 10 years in that house. 5 to 10 years. And you don't think there's gonna be anything that's gonna force you out, because the problem is everything looks so great right now because we're right at the top of the market. Everyone's like, oh, it's great. Prices are gonna keep increasing. They're saying 7% this year, 10% next year. Nothing's gonna stop till 2024. And people keep moving in, new employers, all this stuff. These are signs that you're at the top of the market because everyone's overpaying by like $20,000 to $100,000. That's Denise typing on her iPhone. And this is it. This is the signs. Everyone's buying houses. Everyone's trying to buy houses. I've seen a few, and maybe you're in one of our groups, Raleigh Community Information, RCI.ONE. People are saying, we make good money. We can't afford to buy a house. What's going on? When's this going to change? Well, I'm here to say, don't rush into it now. Don't buy. Wait at least a year to buy if you are not a homeowner right now. Anybody who's bought in the last year and anybody who buys in the next year, I think, is going to get burned. That's what I think. Unless they can afford to stay in that house and they want to stay in that house for 5 to 10 years. That's how bad I think things are going to be. And it doesn't seem that way right now. I know it's very unpopular, and I'm sure every realtor out there is going to say that I'm full of shit. Okay, but you have to tell this to people. This is so much more important than business. People's lives are going to be, I think, negatively impacted. And we can watch this video in 5 years, and maybe you'll laugh at me and say it wasn't. And I'm not saying today is the absolute top. I can't call it the absolute top. But what I'm saying is, if you don't need to buy a house, if you don't need to go into a new rental contract, because these are up 40%, and if you're renting now, I don't even know what to tell you. You know, I mean, everyone's talking about rent control. Think about it. All these places I named earlier in this video, they're all talking about rent control, or everyone in those areas is saying, we have no rent control, we need rent control. Well, these are all signs that we're right at the top of the market, okay? So I say, if you can sell some of your real estate now and you really have a better place to put that money, because I don't know where to tell you. I don't know about stocks. I don't know about cars or whatever. So many assets, so many raw materials are so overpriced right now still. I think it's all gonna go down. So I can't tell you where to put. If you want to start shorting markets, I have never shorted markets, but I did want to short the oil market in 2008, if you remember that. That was right before the housing crash. There was a giant spike in oil prices. They went from like $1.50 a gallon to like $4 a gallon in a very, very short period of time. And I wish I had shorted the oil market back then, but I didn't. But I'm telling you, all these markets are almost short worthy right now. And you've got to stick with really innovative companies. And that's why you see Tesla in the back. Because I've made videos on this before. I think that when this crash happens, I think that, you know, GM may go out of business. Ford may go out of business. Chrysler may go out of business. A lot of the traditional automakers who are not solidly into the EVs, even Toyota is going to take a huge hit, even though they announced this big factory. I know now between Greensboro and Raleigh, there's going to be a huge battery factory over there, close to Greensboro, which is great for those houses, those areas. And I've got some rental properties over there, which is awesome. But and Toyota is a huge player. The other more smaller players are probably going to all disappear, I think, unless they have a massive presence in electric vehicles. That's a whole other story, but there's a huge pendulum swing that's about to happen. It's a huge crash, in my opinion, and there's going to be a lot of pain. So let me know your comments on this. Thank you so much for listening. Denise, do you agree with any of what I'm saying? She's in the back. I don't know if we can get her.
Whatever you say.
She says whatever I say. Yeah, but like I said, I've only made comments like this during the frothy part of a market upturn where at some point in the very near term it crashed, or at or near the bottom. I can't really tell you where the middle is so much. I can't tell you the absolute top, absolute bottom, but we are near top in all these markets I was talking about. Rental properties, purchasing, buying, selling houses, buying, selling new cars, used cars, raw materials. What else did I mention? I can't remember, but all these things. And just the stock market in general, really, with a few exceptions. I don't think Tesla's going to be that bad because Elon Musk is going to take over the world. We can leave it that. But everyone else who's kind of locked into traditional ways, because we keep talking traditional, like even with this real estate. Oh, companies are moving into Raleigh. Well, that's traditional thinking. We're into a new era now, and Raleigh has been great actually during the traditional times. But now that people can work from anywhere, I don't know. I don't think that Raleigh's going to be as resilient. Yeah, Raleigh will not get hurt as bad because it's always more of a value market than a growth market. And some people are saying, oh, we're in the growth phase now like California. I don't know about that. I think that all the companies moving in, it's going to mean it's more stable than others when the imminent collapse actually happens. That's what I think that's how I think Raleigh is going to benefit. If you have any questions, let me know. Send me a private message to my Facebook, Mike Young Real Estate. Join Raleigh Community Information, Raleigh Community Information, rci.one is the web address. Thanks so much for listening. Bye.